Good morning. Paul Georgie from Allendale. It's September 3rd, Tuesday morning. Grain markets sharply higher this morning. Beans knocking on 50 cents higher right now, and on the highs of 14.09.5 made last week, and which is a double top on the chart. So if we crash through that, expect more upside potential just based on stop activation. But the weather is the main focus here this morning. We've got the forecasts that are conflicting about rain amounts as far out as 7 to 10 days. The lack of rain over the weekend for most of the Midwest, about 40% got some type of rain. Smaller areas got heavy amounts. Us here in northeastern Illinois, we had heavy rains on Friday night, as much as 2 inches. So the varying amounts of rain, the stress on the soybean crop is what's driving markets here this morning and helping pull corn and wheat markets higher as well. The trade is looking at the crop conditions report this afternoon, expecting anywhere from 3 to 5% decline in good, excellent category. There's talk from the trading floor that traders now are thinking that bean yields could be under 40 bushel an acre, some down even as low as 38 bushel an acre because of the dry conditions that we've seen over the last several weeks. Allendale will be releasing our 24th annual yield survey results tomorrow morning at 7:30, so stay tuned for that. We thank everyone that has helped us with the collecting data and the inputs. We'll give you those numbers tomorrow morning at 7:30. Other news, Egypt bought 355,000 tons of wheat from the Black Sea region here over the weekend, some from Russia, Ukraine mainly. The outside markets, kind of a tug of war today as far as traders' attitudes with the some of the liquidation that we've seen in gold and energy prices here overnight. Equity markets stronger again due to the president's delay in making a decision on the Syrian situation. Waiting for Congress to come back. That'll be another 10 days possibly before we get any decision from Congress on what to do with Syria. In the livestock markets, the cutout values were weak on Friday. Choice beef down 4 cents, select down 54. Pork cutout values were down $2.07 on Friday. So we're seeing that seasonal decline in demand of product here, hoping that we might see a bit of fill-in buying by retailers early this week to support the product, but going into a time period where lesser valued cuts are the feature at the retail counter, which causes overall decline in cutout values as it's harder to move these primal cuts. The cash hog market expected to be steady to lower. However, we expect that we could see some steady, firmer openings in the futures market here this morning, and then traders will have to deal with the higher feed costs and demand situation on the product. So look for some volatile trade here today. Technical action in the grains is going to be key with this 1409 area as resistance. If we can close above that, expect further upside potential, and not a lot of resistance until we get to $15 on the upside in the November beans. So stay in touch with Allendale, and we'll keep you informed. We'll keep giving you ideas on how you can maneuver through these volatile times. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.